Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
Jim, thanks for having me.
Tim, we live in a land of bubbles on the stock market, in real estate. It seems bubble mania is happening all over the place. And you said this is kind of like the South Seas bubble. What was that all about and what happened there?
Well, it's been a long time since I read that history, but I was just equating it to, this bubble being of no substance. And what I mean is, at least back in 2000, we had the .com bubble. There was the internet bubble. There was an infrastructure, with the railroad bubble. There was the railroad with, the bubble back in 1929. You had the Industrial Revolution. What do we have here? The South Sea bubble, that was basically just a scheme to peddle the debt, and, what do we have here? We had, and it sounds like a broken record to say this, but coming out of the 2009 low, we had the worst financial recovery since the Great Depression, or the worst recovery since the Great Depression, I should say. And then, we're struggling to get back to that point. And they've done all this stimulus and so on and so forth, and it's just blown the bubble tighter and tighter and tighter. And what? Here we sit, still. And so that was the point in that comment, is that it's just a purely speculative, debt-driven bubble with really nothing to support it.
And when you say debt-driven, we're taking a look at, we've never seen margin debt higher. And how does that usually end up when people are borrowing money to invest in something that's likely going to blow up?
Well, usually not well. Just like most debt, usually not well. And, I think that the things that we saw, we may have talked about that briefly, but the things that we saw with some of those stocks, I think that's, a sign of those times.
Do you get anything out of this time if you invest in these sky-high stocks? Are you going to get big returns out of it? At this point, it's like catching a falling knife, as they say, or a train that's left a station. I mean, how much crazier can this get? I mean, this is. I think I may have mentioned, or maybe it was a thought, but I think maybe I made the comment something similar to that. This was, in my mind, this now. I don't know if I used the word dwarfs, but basically the 29 bubble, the 2000, 2007 bubble, and many of these other bubbles in the past. What we have now, they pale by comparison. So how much longer can it go on? I don't know. I mean, that's a shot in the dark. From my seat, it goes on again. I'll say this until we get structure that we see, that tells us that should be at a top. And, we haven't seen that yet. We saw it try to set up in 2020, and it was saved once again. We did get the decline following that setup, which was quite a shocking decline, but then it recovers and everybody's forgotten about that. I mean, I remember seeing people, neighbors and such, talking and basically crying, and and women would literally say, "Man, if this had just ever come back, we're going to cash out and put our money away for our retirement." And now it's all fun and games, and people's forgotten about that. And so the complacency and the things that we saw with like the GameStop and all this is a sign of the times. And again, just like the setup back in 2020,
when we saw in February where it came quickly and seemingly out of nowhere, and we talked about that. I said that's the way it's going to happen. It's the way all these bubbles happen, and that's the way this top is going to occur as well. And it's that structure that we have to understand when it sets up that it's giving us the clue that something is wrong. Then the question becomes, well, can they save it again? I mean, how many times can he do this? I mean, it's basically this started coming out of the 2002 low, and then we saw the same scheme coming out of the 2000 and, it pushed us into the 2007 top, and then we saw the same scheme intensified coming out of the 09 low, and then we saw it again in 2020. I mean, how many times can you do this, and what's been fixed? Like I said, we're struggling to get back just to the levels we were in 2020, which again was the worst financial recovery since the Great Depression. So yeah, it's a scheme, and it has no substance, and it is a bubble. So I don't know what more to say about that. I mean, it's someone that it jumps in at this point. It's a shot in the dark.
What does it say when institutions now are investing in things like Bitcoin?
Oh my God! I mean, have you looked at a chart? I mean, that's the thing. That's the thing with this, with these bubbles, that when they go parabolic, again, where's the top? You don't know until eventually, if you look at, here's the one thing, I don't mean to harp on this, but when something goes parabolic, are you at the bottom third of it? Are you in the top half of the parabolic move? Are you at the top of the parabolic? I mean, where are you in? I don't know. Throw a dart. But what I do know, like I said, is every one of these parabolic type moves, they have a certain signature that I've identified, a certain structure. And we saw it. I saw it. I wrote about it. I saw it in 2020 at that top. And it appeared, but it was, it was saved again. And so again, all I can say is until we get that structure, I don't know how far this can go. I don't know. I don't know if that's an answer, but it's the only answer I've got.
Well, Tim, you are an expert at spotting these peaks and valleys. And when people said the March 23rd crash happened without any warning, I said, obviously you weren't listening to HowStreet.com, because Tim Wood very clearly said, this is about to collapse. It's a house of cards. There's a hurricane about to happen. Look out, baby.
The structure was there, and it left nothing but air. You are 100% right. It was in print, on paper, in the letter, absolutely. And, not to pat myself on the back, but here's the thing. I think I lost my train of thought a while ago. What you were alluding to is that people, they forget. It becomes a new norm. You see something so abnormal as these parabolic moves and the greed. The greed fuels the move, and then people accept it as a new norm. And now the new norm is everybody knows that the master planners have this. That everybody knows that we have the green. What was the term they used to use? The green span put. Everybody knows to buy the dip, hold. Everybody knows the market's going to recover. And you see these parabolic spikes like this start, people accept it as a new norm rather than the extreme abnormality that it is, and it just fuels itself and fuels itself and fuels itself until it burns out. But in this case, what we have further fueling it is the Fed itself. Every time the market will try to correct and ease down, they step in with stimulus. They step in with a tweet or a news, or, we got a China deal, or, we got a vaccine, or, we got anything and everything to fuel it. And so this has just blown this thing higher and higher and higher. And like I said, it has no substance at this point. But the one thing I can say, because looking back at the history, I identified back in 2008 on the air with another talk show, the top in crude oil, the housing top, the top in 2000, the top in 2007. And this top has been more elusive because it has been further fueled with greater efforts by the master planners, if you will, to keep this thing going. So that is the one thing that has made this one so much more elusive, if you will. But the setup has to be there, and that's the key.
And, we'll see it. We will see it. It has to be there. It'll happen. When? I don't know. That's what we're tracking. And again, I say this, I think it's going to come quickly with very little warning.
We'll have more with Tim Cyclesman Wood right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Value from success, growth, and discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, will all this stimulus and help to get out of the pandemic recession, will this lead to rampant inflation?
No, I don't think so. And not yet. I do think those cards, that may happen, but not yet. There is a lot of talk about fears of inflation at this point. I'm doing actually an extensive, I say extensive, a very, how do I want to call it, technical study on that and working through some data in this next research letter that will explain everything in detail of what we're seeing and why and so forth. But in short, I think what we're seeing here is, we had some cycle lows. We've seen the rally in commodities just like we have with everything else. But I've said all along, and I stick to it, that I think that we're pushing into major tops across the board in all asset classes, and that everything's going to peak and go down together, just like we saw in '08, except worse. I think that this is being mistaken as inflationary, and I'm not saying there's not some inflationary tendencies out there. Obviously there are. Have you been to the grocery store lately? Have you been, to Lowe's to buy a 2x4 lately? I mean, yes, we're seeing some, prices that have definitely moved up in just virtually everything. But looking at it from is this an inflationary or reinflation type move? I don't see it. I see it as the dead cat bounce that's been fueled by hope and hype and so forth to try to keep the mania going.
We'll have more with Tim Cyclesman Wood right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, when this giant bubble of everything bursts, how bad will it be? And like you said, we don't know when, but how bad?
Well, I don't have a crystal ball, obviously, but based on my understanding of history, based on my understanding of what I think is happening at this juncture in the world, we're already seeing the signs, if you will. I wrote a long time ago, seeing this coming, several years ago, probably 5 years ago or more, after finally getting my mind around, I think, where we were going and what was happening. that, when this bubble burst, and I mean really burst, that it would, I forget the quote exactly, but I said something to the effect, I need to find that and put it in my letter this next time, but anyway, said something to the effect that it would stress the very financial, economic, political, and social system. And I think that's where we're headed. I think that what we're seeing with the political theater that's going on in Washington, I think what we're seeing with the, socially, I think that's just a precursor. I mean, wait until this thing really does come unraveled, and the cattle have been kept calm now because, financially things are still pretty much normal. Everybody is hopeful that we're going to return to normal. People have accepted the bubble rather than the abnormality, the extreme abnormality that it is. Like I said, in my mind, it dwarfs anything we've ever seen before, but it's been accepted as a new norm. Well, wait till that rug is pulled out from under people, and the people that have, the average middle class working stiff that has a retirement, that has a pension, that has money in a 401k. Wait until they lose and realize the bullshit line that they've been told. And that's when we see the real crisis and the real panic and the real, this is nothing. And so again, how long? I think this may be why there's been such a great effort to postpone and keep this thing going, is because they know, what we're dealing with. And so if you can put that off a year or two or three or whatever, of course, put it off, kick the can down the road, as they say. And so they've done that. But what we have also seen, and we've talked about this, but it's been a while, is an element of diminishing return. And, to put that in perspective, I don't have the data in front of me, but it started in 2000. I said all along, it's been going on for 21 years now, but in 2000, I said that was the organic top of the market. And if you look at, the employment numbers, you look at velocity of money, you look at, you can look at something as simple as the, the job participation rate. There's all kinds of volume characteristics of the market and so on and so forth. Everything kind of peaked in that 98, 99, 2000. It just boom, 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 everything rolled over into a top. And it was kind of a natural top. And then coming out of the 2002 low, we see some stimulus, and the Fed steps in, and we see stuff, and it pushed things. It turned some of those economic indicators up, and yeah, that was good. And the market rallied. They stretched it into the 2007 top, but it didn't fix anything. We got an upturn, but it created the worst financial crisis since the Great Depression. And then we go down into the 2009, low with that. And then we come up and they push and they push and they push and they push. And then we get into the 2015 top and we kind of roll over a little bit, nothing great. And then we turn up into the 2020 top. And then again, looking at that data, we talked about that over the last year or so. Whenever they were touting the job numbers and how great the economy was in late 09, I'm like, no, in late 2019, I'm like, no, here's the numbers. It's not showing, when you look at the data, it's not saying this, credit's not expanding. We've talked about that. The banks aren't lending. We've talked about that. The employment numbers really aren't what we're being told. The growth rate isn't there. We've talked about that. And you look back at this data and you go, this is the worst economic recovery since the Great Depression. Put that in context. It's an element of diminishing return that we've seen with each one of these. Granted, it's been going on for a long time. And so now here we sit coming out of the 2020 decline. And at this point, hear what I'm saying. We're struggling to get back to those levels. When I say those levels, the levels that were of the worst, the levels that we were at post 09 that were the worst, encompassed the worst financial, I'm struggling from the worst financial recovery since the Great Depression. We're struggling to get back to those levels. So, yes, there's been an element of diminishing return, and nothing has been fixed, and here we sit. A baseless bubble.
Tim, thank you so much for chatting with us.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HouseStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.